In this trade, price barely tagged my entry, but then exploded towards my take profit. And the higher time frame narrative is what made the difference. My name is Bai. I document every trade I take and every backtest I run, wins or losses, as I work towards consistent profitability using market structure, liquidity, and price action analysis. In this video, I'll break down this backtested trade that combined two key concepts that have been extremely effective in my journal: following the overall trend and identifying consolidation as hidden orders. We'll go through the higher time frame bias, the lower time frame entry model, and the lessons this trade taught me. Let's jump into the chart. Okay, so we turn the clock back and can observe that as of 10 a.m. Eastern, we are bullish on the 15-minute. You can see that we have a swing low and it recently broken structure to the upside with this swing high and created significant displacement in that move up to create the new high. If we zoom out further, we can see that we've been very bullish for the last few days, creating significant fair value gaps along the way, which supports our bias that we want to seek higher prices. And so as we move back into present day price action, we know we have the bullish bias, but something else that's supporting that thesis is this collection of orders here. Starting with Asia through London session, we've been consolidating orders. This tells us that buyers and sellers are fighting it out to see what price is fair and have identified this zone as such. But since then, buyers broke out. And so the theory is that we might see price re-enter this zone to collect more orders before continuing the overall trend to the upside. And so for us, we want to see if we can find ourselves this zone. And so once price does that, we will drop down to the 1 minute, but we'll play price forward to see if we can observe that reality. And right there around 10:15, we get a mitigation of our key area. And so that's our signal to drop down to the 1 minute. Here on the 1 minute, we can see that price action a lot clearer. We're creating lower lows and lower highs. And so we want to find a key level for, in this case, buyers to break and close above. For me, it's this key level right here, which we'll denote with the orange line. It's the last high that's been created before a new lower low is identified. And so let's play price forward to see what happens. A few minutes later, buyers are able to successfully break and close above that key level we had identified here on the 1 minute. And so that's our signal to drop to a higher time frame to see if we can find a viable entry for our trade. As we toggle through the 3, 5, and 15-minute charts, we see a potential option right here on the 3 minute where we have two fair value gaps. Given how aggressive price has been, I want to make sure I get into this trade and don't miss out on the move up. And so I'll place my entry at the top of the highest fair value gap and place my take profit for a standard 3R trade, because in my back testing, it's been shown to be highly profitable in terms of a win rate, which is more important to me since having a high win rate has a direct correlation with my confidence. And so in the beginning of my trading journey, I'm going to target 3R, knowing that I can always take partials and extend my take profits if price moves in my favor. And so that's why I'm going to set up my trade in this fashion. If we pop back to the 15-minute, we'll play price forward to see what happens. We can see that price barely tags us in for a perfect entry before rallying upward towards higher prices and hitting our take profit for a nice 3R win. Now, as I said, I could always take partials along the way and extend my take profits in order to collect more profit. But this is something I'm working on. And so it's not part of my active trading experience, but something I'll look to fold in the future. So the key lesson here is this: follow the trend and respect consolidation as hidden orders. Not every opportunity is at a clean level. Sometimes I'm learning that the real edge is understanding where positions are building. And this is something I've started to notice more and more in my backtesting, but also when I'm live trading. Some of the best moves come from the least obvious areas. I'm not a guru. I'm just someone documenting my journey towards consistent profitability using market structure, liquidity, and price action analysis. If this breakdown helped you see the charts differently, then subscribe. And if you want to see another trade from my journal, then check out this video right here. Every trade teaches something different, and the next one might show you something you've never noticed in the charts before. I'll see you there.